name is Paul Barron. Welcome back into Tech Path. Let's get started. I do want to thank our sponsor, and that is iTrust Capital, which, by the way, you can also get gold and silver over there on your crypto IRA, as well as Ethereum. So all of that can be managed over on iTrust Capital. We are nearing the deadline for your 2024 IRA contribution. This might be a good one for you guys. All right, so today I want to kind of break this down on gold, Ethereum, and really kind of the overall value of the dollar. And it gets interesting here because there's a couple of things that I want you to pay attention to. Gold prices officially surge above 3150. This, again, continuing to climb. Gold has been on a tear all year long. And, of course, Peter Schiff has been just chastising the Bitcoin community. And his nice statement right here is false narrative that Bitcoin is digital gold is being exposed. Growth is slowing, inflation is rising as stagflation fears are starting to spread. And his basis is on tariffs. Tariff uncertainty is adding to the pressure on financial markets. And then, of course, gold hits its all-time record high and Bitcoin struggling to maintain above 80K. Now, if you look at that, it appears that Peter Schiff might have a point. All right, so I want to show a chart here, and this goes back to March 10th, 2023. And you guys will remember Silicon Valley National Bank. That was the big explosion that happened in the crypto community. And many people looked at that and said, well, Bitcoin is the safe haven escape here. And in reality, what happened was that this is really just Bitcoin people and crypto people moving to Bitcoin, not necessarily going into long-term store of value. And I think that's the point that we're making, is that gold, actually in this particular case, especially in these times of uncertainty, might be the safe haven. Now, how is it connected to Ethereum is the question. I want to go further into this. Why gold is outshining Bitcoin as the safe haven. This, of course, is going against the tariff chaos right now. Look at the comparison on this chart. Let me kind of zoom in on that for you guys right there. Because what they're looking at, this is based on a bunch of financial advisors that basically did a survey and said what would they think would perform better if we continue to see this full-blown trade war occur. Gold became one of the top selections. And, of course, you see the 30-year Treasury, commodities, and then T-bills, etc. But Bitcoin falling down, really down to, what is that, number 6 position right now at 3% of that particular survey of financial advisors. So that's the people that are telling the biggest asset managers and private capital in the world where to go when we start to see this uncertainty. Okay, so I want to jump to this portion of the article in this same section. Gold's no longer just a hedge against inflation. It's being treated as a hedge against everything. Geopolitical risk, de-globalization, which we've talked about before, fiscal dysfunction, which is the deficit, which what we're facing right now, and now weaponized trade. So all of these things are aligned. Very interesting. I think my friend Andy Schechner would say this is exactly the point of where gold's value could be going. But if you look at tokenized commodities, what is connected to tokenized gold? Well, it's Ethereum. Look at the growth of what we've seen just on tokenized commodities, all based on Ethereum. Another thing that I want to hit on right here, remember we had the Tiamonds guy on not just last week, go back and check that video out. He talked about tokenizing gold and that it was going to be launching. We were trying to figure out which chain and what they were going to launch on, and in fact, what they ended up doing was launching on Ethereum. So Tiamonds now available over on the Ethereum network where we're going to see tokenized gold. All this, again, good value for tokenized gold overall. Other things I want to hit on, whatever happened to the gold audit at Fort Knox. This is a big factor that Elon's been kind of talking about and also Trump has been talking about. And there is a certain amount, I don't know the term exactly, but there is a certain amount of gold, we'll call it vaporware, so to speak. It's not really there in the world. This includes other banks, central banks, all sorts of digital asset holders. And people are starting to get a little concerned about that because it could value gold up. And this is something that Schechner has talked about before. But I want to go to this clip real quick because this is Elon talking about the audit. Take a look.
Oh, Fort Knox. Oh, yeah, right. Oh, yeah. I think it would be awesome to live stream Fort Knox. I mean, that would be really fun. You know, hopefully it looks really cool. You know, you open the doors, like, is it there? Like, is that really gold? Let's check.
This guy's getting on my nerves a little bit. So the point he's made, I think the point that everybody's making is that you can't nonchalantly just say things like that because there are and could be severe impacts on the market if there was any deviation. Now, it could also be severe impact on the markets upward if in fact people start to understand the value of where gold could be going. All right, so I want to go to this next clip because this is a bunch of gold bugs that essentially are panicked because of the potential here around tokenized audits. So it could create a big rush on gold. Take a look.
This is why I'm kind of bullish on just owning any of gold space things right now, because if they go and audit Fort Knox and all the gold's there, like, is gold going to sell off? No. But if they do go to Fort Knox and audit and they're like, there's only like 10% is supposed to be here, physical gold is going to go hyperbolic.
The tokenization sort of already started with like digitization and digital trading. So you've got these ETFs, the iShares Gold Trust. But every year they have to pay fees on that gold that they keep in the vault, and they pay those fees by making new shares of the stock. And so that sort of like dilutes the ownership.
Right.
So actually only 97% of the shares of the GLD are backed by actual gold. And this is something interesting that I learned from talking to an executive at, I want to say she's at Newmont. 10% of the gold in vaults around the world is, as she put it, spurious.
So it's
fake.
Yeah.
I want for you guys to remember, we've done several videos on this, the concept of BRICS and what it's going to look like if we see a reserve system within the BRICS nations. And one thing that they've been trying to do for quite some time, part of this was built on the idea that Bitcoin could be used in terms of transfer cross-border payments. And this is where they have basically abandoned this. If you look further into the article, it says taking into account digital technologies and digital financial assets. This is the thing that they're going after from a settlement side of things, which means we're seeing more of this go on to the Ethereum network. Now, I want to also show you a comparison right here on gold and the annual central bank net purchases. So this is continuing to climb. And this is going to start to put, I think, more and more digital assets, especially on the Ethereum network, when it comes to commodities such as gold. All of this is going to be climbing. So if you're playing into this, you got to look at what some of the big players are doing. One of them, largest bank in Russia right now, is tokenizing its gold as a digital asset. If you go further into the article right here, it says their blockchain solution was originally based on Hyperledger Fabric. And then, however, it plans to open up a range of participants to new include consumers, and then at the end, it's announced that the blockchain is now compatible with Ethereum. Also, when you go over to Switzerland, the largest over there in terms of a banking giant, they've also been experimenting with blockchain. So they came in and said now that UBS has completed a proof of concept for its UBS Key 4 Gold. This is offering Ethereum Layer 2 network on ZK Sync. This is the point that it gets into because Swiss clients now could purchase a direct claim to physical gold and tokenized securities. So this again are tokenized assets on commodities like this. This is just meld gold, granted a small percentage in terms of that, but if you add it to lending pools and you go into adding USDC in there, some stablecoin, things get pretty interesting at around 8% in terms of yields. Now I want to go over to a clip because this will get into where do yields come from traditional banks and how do they treat them. Take a look.
Where does this yield come from? Because doesn't gold just sit there?
Yes, it does, but it doesn't have to. Banks love gold as a collateral. It's the number one choice for banks when you put down collateral and then you borrow or take out a loan. If we put, to say, $1,000 worth of gold or $1 million or 10 million, you can take out 85% or up to 85% of the value of that gold that you've put down.
Wow.
And we would take it out in fiat. What's considered to be the most less risky, low risk would be, for example, 3-month rolling US Treasury bills. I think it's now 4.5, so it's dropping a little bit. The cost of the loan is also incredibly cheap. It's between 1 and 1.5%.
Wow.
So even if we're playing with short-term T-bills that don't pay out a lot, it still leaves something for us to earn.
Yeah.
But importantly, the token holder then gets a share, and we pay that share out.
So when you look at that clip and the potential here for institutions to dive into DeFi, well, Ethereum is the route. And obviously the opportunity here is to leverage a lot of those assets into DeFi themselves. So again, better gains on yields within a DeFi ecosystem. All right, so you look at a clip here. This is Larry Fink, and this concerns me a little bit because he has been very bullish on the economy and the growth and the opportunities. And I fear that he is losing hope in the economy as it is. Take a look.
received a lot of calls. I received a call from a pretty famous actor. Should I sell? I mean, I get all this stuff. Oh my God, things are coming in, and I just, go make a movie. We had that wealth effect, and now in the last 6 weeks, we've had, a real reversal in psychology. And I think this is going to take some time until we have a better understanding where the economy is going, a better understanding of the policies that the current administration is going to be building out. I don't want to be, this is not webcast, is it, guys? I would not be surprised to see elevated inflation over the next 5 months. I would not be surprised to see, and across every CO I talked to, we're starting to talk about a more fearful economy going on right now. The question is it going to fall another 8% from here? And that's a possibility. It's a buying opportunity. Every time, when you think about all the people who panicked during COVID, or those who invested during the height of fear, were the biggest beneficiaries of that market setback.
He goes into a report that BlackRock puts out, and they focus in on the federal debt held by the public. It says U.S. doesn't get its debt under control. If deficits keep ballooning, America risks losing its position as to digital assets like Bitcoin. Now, he talks about that further in here. It says, to be clear, I'm obviously not anti-digital assets. So he's saying far from it if you look into the next section. And what he's talking about here is tokenization. And this is something that Larry Fink talks about often. BlackRock is already starting to show their hand that their belief in tokenization, and if that is going to be a factor in the growth of this economy, if that occurs, and it looks like it's going to, Ethereum will be one of the key platforms that it will grow on. All right, so when you look at the current situation of the dominance of the US dollar, then you have to kind of consider out what's happening within the stablecoin market. This, of course, is the Stable Act going into committee this week. If it's favorable, the bill goes to the House for further consideration, and most likely this could combine with the Genius Act, and that will be the one that helps this get through the Senate. Senate, of course, passed their version of the Genius Act 3 weeks ago. Next step will be an eventual Senate vote. All of this still very positive. All this has to be done before August, so think about that. Then you have Circle, who is an issuer of USDC, who's hired JP Morgan and Citi for its long-awaited IPO. So it's likely that we're going to see something active in terms of stablecoins within JP Morgan and Citibank going forward. So when you look at a lot of what's happening on the regulatory front, and you consider kind of the situation that is playing out right now around tokenized gold, and also stablecoins becoming a huge catalyst within the market, all of that is based on the Ethereum ecosystem. Ethereum also has reached possibly its bottom. If you look at this chart right here, we are nearing it, and right now is a kind of a point of no return right now. So we're watching Ethereum very, very closely as we get into this next cycle, even with these tariff wars potentially on the looming front. Also, don't forget, Ethereum has a huge upgrade happening. This is a whole stack of EIP processes that are coming through. This is what they call the Petra mainnet. This is going to be launching on the 30th of April. So it's the largest upgrade of Ethereum in terms of included EIPs. So this is a big deal, I think, going forward. Now, the question is do people really understand what it means, and will they take advantage of it? And do we see ETH continue to move up if we continue to see gold hedging up? So let me know in the comments down below. Make sure to hit subscribe right now and join the Diamond Circle. It's a great place to get additional content from me. Follow me on X @Paul Barron. We'll catch you next time right here on TechPath.